How's it going, everybody? It's Stas here. Welcome back to another video. So in today's video, we're going to be talking about and breaking down the top couple of stocks and ETFs that I'm personally watching and looking to trade right now in the year of 2020, and more in particular, heading into the month here of March in 2020. And what I also want to do in this video is go over what the S&P 500 did in these previous 5 trading sessions, and I also want to go over what the stock market futures are looking like right now as it is about 7:18 p.m. Eastern Standard Time on Sunday, so we can better plan our trading heading into tomorrow's session. And let me tell you guys, these futures are gapping down quite aggressively, so I want to point out just some general areas to keep an eye out for in terms of the NASDAQ, the S&P, and the Dow Jones. So without further ado, guys, if you enjoyed this video, hit that like button, consider subscribing to the channel if you want to see further content like this, and if you haven't gotten your 2 free stocks from Webull valued up to $1,400, my affiliate link is down below in the description box, and if you deposit $100 into the account using my link, you get those 2 free stocks valued up to $1,400, and it helps me and supports the channel and all the free content that I'm putting out here on YouTube. So let's talk about very quickly here what the S&P did in these past 5 days of trading, judging here on the 5-day, 5-minute chart. And if you guys have been paying attention to this market, you know it's been getting a bit choppy, right? The markets in general, they've been selling off. We've been seeing gold take a big leap, right? Gold is back to highs here, not all-time highs, but they're back, or it's back rather, to I think it's a yearly high at this point. And let me double check. Is it an all-time high for gold? I should know this. No, it's not an all-time high, guys. That's a memory fog on my part, because back in 2010, gold was at 1923. So back to the S&P here. Let's not get too sidetracked. Overall, in the past 5 days of trading, S&P, the markets in general, they were kind of flat for the first 2 days, actually for the 14th and the 18th here, right? And we actually hit an all-time high on the 19th, but after that, the last 2 days of trading, Thursday and Friday last week, were absolutely bloody. And if we go over here to the ES/ES, which is the E-mini S&P 500 futures, which, if you guys don't know, you can see these every Sunday, 6 p.m. Eastern Standard Time when the futures market opens. So again, you can plan your upcoming week of trading, or really for the upcoming day of trading, depending on what type of move it makes. And in this case, it made a huge move to the downside, and that's the S&P, right? We can see it here on my chart. Again, /ES is the ticker. It's currently down $40, down 1.17%. And what does that tell me? Well, that tells me that the red here, the selling, is continuing heading into the weekend, and most likely here, it's going to be a rocky start to the week, right? And if we pull out here to the 4-hour chart, take a look at this, guys. We broke the 180 SMA support here with this 1.2% gap down in the futures, which is a bit worrisome. Although the uptrend in general is still up, this is still something to keep an eye out for, right? And honestly, what I'm looking for in the S&P in general here for these next couple of days is, are we going to hold this, right? Are we going to hold this overall trend on the 4-hour chart and maybe rebound? If that does happen, you know, that could open up a nice dip opportunity in a bunch of these ETFs that trade on the S&P, and a bunch of large caps that have been affected by the overall markets taking that hit. And if we look overall now on the 1-day, 1 minute for the past hour, 22 minutes since the futures market's been open, one good sign is we are seeing consolidation here on the S&P, ever since that gap down. So for tomorrow's session, this is a support to watch out for. Roughly 3,300, maybe 3,290. Keep an eye on this general area, because if we see some sort of pop, that could mean that the S&P could potentially turn green tomorrow. This happens, guys. Trust me. We see a big gap down, then all of a sudden the next day it starts to fill the gap back up. That could definitely happen here, in my opinion, for the S&P. But on the flip side, if we were to take a dump off below this support that we're seeing here from the consolidation from the past hour, that could lead to further selling. So let's take a look here at the NASDAQ. This one's getting hit very aggressively right now, down 1.62%. And this is on the back of Friday's performance, which was yet again, I think it was down, 2% at its lowest on Friday. Ended up closing down like 1.6%. So overall, the NASDAQ here, guys, has been getting slaughtered if we're looking just in the past couple of days. And we can see, just like the S&P, we're trading right around that 180 SMA support on the 4-hour chart here for the NASDAQ. So definitely keep an eye on this heading into tomorrow's session. And one ETF that could open up a buying opportunity if you're still long on these markets in the short term, could be TQQQ, right? This is one that goes up whenever the NASDAQ is going up at a 3x rate. And let's say you think the NASDAQ is going to fall further, you can trade the inverse to TQQQ, which is SQQQ, right? This one goes up whenever the NASDAQ is selling off. So these are some options here, guys. And another thing that, honestly, a technical pattern here that I haven't talked about yet, and a lot of people have been pointing it out, and I've honestly noticed it myself throughout the community, is the bearish divergence that we're seeing here on the S&P 500. Take a look here, right? The trend overall is up when we're looking at the price action just in terms of the chart here, right? Just take a look here. It's up. Higher highs, higher lows. But if we look down here at the RSI, the relative strength index, we can see the price action is actually, or not even the price action, the lines here are showing us that it's making lower highs and lower lows, right? That is what's known as a bearish divergence, right? The candlestick, the trend is pushing up, but then the RSI is pushing down. And what that shows, guys, is overall here, we're seeing weakness in the trend. That kind of shows us that there could be some weakness here. And the fact that we are seeing that sell-off kind of confirms that technical pattern here of the bearish divergence in terms of that sell-off we're seeing in these futures, right? And if we're taking a look at the Dow here, it's down 1.17%. And this thing is far away from the moving averages. We actually broke those last week, although we are maintaining the uptrend still, right? Just watch this, guys. Watch this trend heading into this upcoming week on the Dow Jones. Watch for it to hold maybe 28,500, maybe 28,400. That is where I'd consider at least maybe buying the dip in terms of the Dow Jones here. So those are some thoughts on the markets in general, the futures analysis, some places, or not places, some levels really to keep an eye out for here for this upcoming week. And I think the bearish divergence is seriously something to consider, not even consider, but just keep an eye out on, because it's really seeming like it's playing out here. So let me know down below in the comment section, what are your thoughts on the markets in general? Now, let's just break down what is going down in terms of my watch list, right? For this week, guys, you probably know my number one stock. If you watched my video on Friday, it's Microsoft. This is one that I bought multiple times last week. I was buying this one, honestly, in the low 180s. I bought a lot more this past Friday at about, what was it, like one time here on this big dip off. I bought a little bit more at around 179-ish, right around here. Then I bought more after it really downtrended for the rest of the day, right down here around, I think it was like 177 roughly. So I'm pretty heavily in Microsoft here. I'd say my average cost at this point is right around like 179-ish, maybe like 180, roughly right around there. And I'm thinking here this week, tomorrow, most likely, if this future, if these futures maintain red heading into the market open, I'm thinking Microsoft, we might see a further sell-off. And honestly, I'm welcoming that with open arms. If you've been following this channel, I've been saying I'm very interested in picking up some Microsoft all the way down in the low 170s. And I even said on the channel it would be awesome if I could get Microsoft in the 160s again. So this could be that opportunity that I've been waiting for. And the beauty of being patient in the stock market, guys, is when you see some of these great opportunities that you've established as opportunities and you're ready for them in terms of having the capital ready to go, you can pounce on them, and that is where you make good returns. Well, hopefully if you've done research and you're in a good opportunity, right? And in this case, Microsoft, again, I could definitely see it going down. Lowest, in my opinion, I'd say 170, maybe 172. Will it go down there tomorrow? I don't know, guys. That's another $6 down. We need to see a bloody day in the market for it to go down there, in my opinion. But 175, 176 tomorrow, I wouldn't call that too far-fetched. And I'd buy more shares there. Excuse me, if I'm being completely honest with you all, I would definitely buy more shares of Microsoft there. So the next one I want to talk about, really, we kind of already touched on these, is the market ETFs, right? Markets are going to be volatile. The overall markets, S&P, NASDAQ, Dow, they're all selling off. So if you're still long on these markets, now is the time, of course, if you do your own research and understand these, but now is the time to pick up, let's say, some of these long market ETFs, right? Like SPXL. This goes up whenever the S&P is going up at a 3x rate. Take a look at this dip, guys, especially if we get to $70. This could be a really nice and juicy opportunity on SPXL, right? Back to TQQQ for the NASDAQ. Not that I want to, repeat myself 100 times, but this is another one that I'm watching that's long on the NASDAQ. So these for sure are two that I'm watching this upcoming week. TVIX is another one, although I don't recommend this to beginners out there. This is more of a, I'd say, intermediate to advanced traders tool to trade the market, right? And this is one that trades based upon just volatility in the market. The VIX, that is, ticker symbol VIX, generally when this goes up, the markets in general are going down, right? That's when we see volatility. And that's kind of when TVIX, which goes back to what I trade sometimes here, that's when TVIX goes up. So for sure, I'm watching that heading into this week. And back to some stocks that I mentioned a lot last week. You can see my watch list here. Some other ones are AMD. I'm very interested in AMD here. And honestly, this will probably sell off tomorrow. Let's be honest. If tech gets hit pretty hard, the markets in general get hit hard, we may get AMD crack below, 5250, which is this support that we're eyeing up here due to it being an old resistance from back towards the end of January. So for sure, I'm watching this level. And honestly, if we get anywhere to the low 50s for AMD, I will for sure either buy some call options on them, maybe some, I don't know how far out, maybe a 2-3 month out call option. I don't know about the strike price. I'd have to look at them individually, but I'd for sure consider it, and maybe even buying some shares on the dip, just straight up shares, right, at about $51, maybe $52 per share. Another one that I'm heavily watching here is going to be J&J. I don't think it's in my watch list. I'm looking here, but I don't see it. J&J, healthcare giant. This is one that people view as a safe haven. Not that it's safe, not that it's completely crash proof, right? Nothing is at the end of the day. There's always risk. But J&J, as you all can see, was up 1.05% on Friday when really 8 out of 10 stocks were down on Friday. So this one for sure is worth watching if there's volatility due to people viewing it as more of a safe option. And for me, I view it as that too, right? So I can see this thing moving from, let's say, 150 back into the mid 150s. No problem. I could see that happening easily. Is it as much of a reward as, let's say, some of these other stocks like Microsoft? No. But again, I would consider it quote-unquote safer, although there's really no 100% safe stock to put your money in unless you're just putting your money in a savings account, which, again, that's not even a stock. So there's no 100% safe return, again, unless you're putting your money in, let's say, some type of bond or some type of high-yield savings account where you're making, what, like 1.7 to 2% on your money annually. So J&J, for sure, watching that one. Another one here that I'm looking to trade is Netflix, guys. And Netflix, this one has been on fire. I've been trading it in and out ever since its earnings report a couple weeks ago, where it ended up doing quite well. I think their guidance was very strong as well in terms of that earnings report. And we're seeing another dip. $390 per share is where it seems like we've topped out at this point. And if we zoom back to that 1 hour, or rather back to that yearly chart, actually, let's check out this 3-year chart. We can see this general 380 to 390 level has been a resistance for the past, I'd say, 2 years at this point. Back here in 2018, back here towards the middle of 2019, right? We got rejected there twice. And I'm thinking if we push above here, guys, this could definitely be the move that Netflix needs to test those all-time highs that we haven't touched at this point since the middle of June back in 2018, which it's almost been 2 years, guys. So watch for that breakup on Netflix from 380 up to about $420. Apple, ticker symbol AAPL. This is another reason why, in general, the markets are getting crushed, right? The CV, the coronavirus, that has been hurting a lot of businesses. We saw Apple guide down for Q1, a bunch of other businesses down for Q1. So that is another thing. Really, I'd say the main driver at this point of what's hurting the stock market, and of course the behemoth company of Apple. So I'm watching it in general to see if it's going to form maybe a horizontal pattern over the next couple of weeks. Maybe not weeks, but maybe the next couple of trading days. And what I mean by that is if it holds 308, maybe 310, maybe we can get some sort of bounce back play to, let's say, 320 to maybe 325. And honestly, guys, at this point, this is probably the riskier, one of the riskier plays in this video, because let's be honest, if the markets in general get rocked, Apple for sure is going to get hit. So is Microsoft, right? Not to sound like some sort of hypocrite, because I'm in Microsoft, not in Apple, saying Apple's going to get hit. But either way, I think Microsoft's at a better dip buy at this point than Apple is anyway. So just watch it, guys. It's definitely worth watching the biggest companies out there, as they do have a lot of sway on the markets in general. And we talked last video about DPZ, Domino's Pizza. This is one that I'm watching on the huge move that it made after earnings, guys. They absolutely crushed it. They raised their dividend by 20%. I believe they beat heavily on EPS and revenue, and their guidance was very, very good with the stellar performance that management has been putting in there at DPZ. So for sure, I'm going to be watching Domino's heading into this week. CCL, Carnival Cruise Corporation, not corporation. Why do I keep calling it that? Carnival Cruise Lines, aka CCL, Dustas. This is one that a lot of people are watching. And honestly, at this point, the trend is still pushing down. So I'd watch to see if it holds overall $39, $40, but with the pressure here from the CV, right, this could continue hitting, CCL and a bunch of other not Carnival lines, cruise lines. Oh my God, cruise lines, guys. And Facebook, this is one that we're seeing some sort of, a dump off here. This is one that if we start to creep low into the 200s, this could be one that I might consider picking up. Maybe down in the 190s. I don't know if we'll even get there, but anywhere between $200, maybe $205, I'd consider, scooping up some Facebook, as that is a general area where we've held over the past couple of months. So overall, guys, I feel like those are a bunch of stocks I'm watching heading into this week. Tesla, it's not doing too great here. I mean, it's doing great, but it's not too attractive of an opportunity right now, in my opinion. Is that a bull flag? No, it's not a bull flag. It's not really looking like one. It kind of did for a second here on the 20-day. Actually, it might be. This one might be worth watching if we do end up seeing some sort of takeoff into the mid 910s. I'd consider maybe playing that, but honestly, I'd like to see some sort of pull down into maybe the 800s again to even consider it. Uber's another one that I actually sold out of to mitigate my risk in the market over the weekend, and now I'm glad I did that because I'm sure Uber is going to get hit tomorrow with the markets in general going down, so I might be able to pick up some shares maybe in the 39 level, maybe in the lower $40 level, which again is awesome because I locked in those profits. Now I'm looking to maybe get in at a cheaper price for a re-entry. And let's end off this video with space, ticker symbol SPCE, Virgin Galactic Holdings here. This is one that was down about 10% on Friday. Wow, I didn't notice it was down that much. So it got crushed on Friday. Seems like we held the overall support at around 33 bucks. Keep an eye on this level, guys. This seems like a head and shoulders forming. So if we do end up breaking 33, I could see this thing filling the gap back down, maybe to $29.50, maybe even $30 flat, right? And at this point, maybe I'd consider buying up some shares, but then again, their earnings report is on the 25th, which is on Tuesday, so I'm most likely just going to wait until after their earnings to even consider a position in space. Or rather SPCE. I just like calling it space because that's kind of what it's spelled like, right? Let's be honest, guys. SPCE. That's space to me. So that's it for this video. If you guys enjoyed it, feel free to go down below for me and hit that like button, and also consider subscribing to the channel if you want to see further content from me. And don't forget to get your 2 free stocks valued up to $1,400 with a $100 deposit into Webull, and join our free communities down below, the Strive Smart Discord group chat and the Strive Smart Facebook group. Did I mention those are free? Yeah, everything down below is free, except for the merch, of course, but everything other than that is free, so take advantage of that. And yeah, I'll catch you all in the next video. Thanks again for watching. As always, peace out.